Well, good morning, good afternoon, good evening, wherever you are in the world. We are excited that you're here with us um, on Co-working Live with Red Worldwide. I am so blessed to be here today, and it is Saturday. And again, this is our Smarter Start Boot Camp. And so, those of you who are with us, you know that if you've been coming each day, we do a different thing every day. And so some days we are consciously focused on really working through some different skills. And the reason why we call it co-working is because we're working together on the skills, and it's not a situation where I'm, working with one person or another person, but we all come together and collectively we are learning about different types of concepts and things that will help us to do business better. And so with that said, in this particular Saturday format. Today is the last Saturday of our Smarter Start Boot Camp on a Saturday. But we will be having Smarter Start Boot Camp again. It just won't be on Saturdays. So I wanted to make sure that everybody knew that today was the last one for Saturdays. And then we will announce when Smarter Start Boot Camp will start again. But in our process of changing up so that everyone can get access to the co-working live sessions. Now, not the YouTube. YouTube is going to be where it is. It's going to always be available for you to go back and watch the sessions there. And we will be putting in some sessions there that were not live, but sessions that are just sessions you need to have. But for those of you who are wanting to make sure that you do that deeper dive, to help you start your business and to start it smarter, we will be coming back with the Smarter Start Boot Camp on a specific day. So let's talk about what's going to happen, starting this coming week. Well, this coming week, we will be having our sessions on Mondays and Wednesdays at 7 a.m. And on Tuesdays and Thursdays, it will be an evening session because we have had some people who were like, I wanted to be on in the morning, but it's unfortunate that I'm not able to get there because I have this thing or that thing and I'm not able to do it. So we're going to do Tuesdays and Thursdays in the evenings. And so that will be right at, I believe it's uh, 7 o'clock Eastern time, which will be um, no, I'm sorry, 8 o'clock Eastern time, which will be um, 5 o'clock Pacific Standard Time. And then on on Wednesdays and I'm sorry, Fridays, we'll have a noon session, which will happen 12 noon Pacific Standard Time. And so my reason for doing this is just so that we can give everybody access that's not had access before. So if you're listening to this and you're hearing this live, you know that on Monday, which is March 18, we are going to be here at 7 a.m. and we'll be here again on Wednesday at 7 a.m. But on other days, Tuesdays and Thursdays, and I apologize for me not having that seared in my mind yet. But Tuesdays and Thursdays, it will be at 5 p.m. Pacific Standard Time, and so just making sure that you knew that that's going to happen because we want you to participate if you are interested in participating. And this is really important for us, to make sure that everybody has an opportunity to be a part of the Smarter Start Bootcamp that is really looking to do so. Well, today we have a very special session planned for our last session in this Saturday rotation. And we want to make sure that everyone has access to the information. So we will be, of course, making sure that this is on YouTube, as well, so that people can participate. And so I'm going to be sharing my screen. So give me just a second. Okay. All right. And okay, you'll be able to see this in just a second. Here we go. Okay. All right. So today we're going to actually use one of our e-learnings, and we haven't done this in a while, and so it's pretty exciting to be able to go into the system and actually have it set up so that you can participate with the e-learning. And I'm going to stop and reshare because I don't think you'll be able to hear the video. So let's try that again. Okay. Yeah, here we go. Share sound. Optimize. I'm telling you, I'm learning all these wonderful tools. I'm learning how to use the YouTube ecosystem. So as I'm learning, I'm sharing. Okay. So here we go. All right. So this particular session is called At the Crossroads, the company crossroads. And so we're going to learn today another set of reasons why you might choose to move from sole proprietorship to an LLC or corporation. And we're going to do this together because I think it's really important for us to do it together. So we'll start off with our little video and then we'll move from there.
Welcome to the company crossroads. You've decided to start your own business. Congratulations. This is a huge accomplishment and the beginning of an exciting journey. But before you get too far ahead of yourself, there's one important question you need to answer. What legal structure will your business have? There are three main options for business structures in the United States: sole proprietorship, limited liability company, and corporation. Each has its own advantages and disadvantages, so it's important to choose the one that makes the most sense for your business. So, you're sitting in your home office, surrounded by boxes of inventory and packing materials. You've quit your day job, rented a small space for your business, and hired a few employees. Things are moving quickly and you're excited to get started, but there is one issue: you chose to go it alone and be a sole proprietor. After all, you're the boss and you will keep all the profits. Your startup costs are low. You have maximum privacy and establishing and operating your business is simple. And besides, it will be easy to change your legal structure later. And if it fails, you can just wind up your business. Right? You're the boss of your own business, so choose a path below and experience the adventure of business ownership.
Okay, well, with that said, we're going to play a little game here. And those of you who want to unmute your mics, you can, and share your information where people can hear you. But those of you who choose to kind of stay there where and want to use your thumbs up, that's fine too. I just wanted to make sure that you know that you could very well participate, in the live way. In other words, you could use your voices on this particular session. So you're at the crossroads. You're having work done on your property. A subcontractor trips over a paint bucket and breaks his arm. He will be out of work for 6 weeks and will miss 3 jobs at $20,000 and a bid for a 2-year job. He sues you for damages of $250,000. Though he was working for someone else, he says you're liable because you hired the general contractor. What should have been the path to protect your assets? In other words, what type of company should you have been if you were really interested in protecting your assets? An LLC or a corporation? Okay, so if you feel like you should have been an LLC, then just give me a thumbs up or jump in and just say it, LLC. If you feel like you should have been a sole proprietor, then let me know that too, or that it was okay for you to be a sole proprietor, that you could be protected there. Let me see what you're working with. Okay, well, let's try the sole proprietor route. Let's see, because some people feel like, you know what, I can handle the $250,000 in damages. I have an insurance policy, and I've got, I got one for $1 million, and I think that I'll be okay. Well, if you're a sole proprietor, all of your personal assets are at risk. You can't pay the judgment, right? If you don't, have it, unless you just want to, take that money that you have and just use it to pay it off, Generally, most people don't want to do that, okay, because that might be their non-risk capital, okay, but it might be their non-risk capital that is used for something else, and so if you can't pay the judgment, the subcontractor can take your home, your car, and $10,000 of your retirement. You lose, and so I want you to understand that when you are a sole proprietor, everything you have is at risk. And this is really important for us to pay attention to because some of us have thought through this thing and, said, well, hey, I got insurance. My insurance can kick in. It can, but what if your insurance doesn't pay at all? Or for that matter, what if the insurance company sees that you were negligent and they decide not to pay? Okay. So now all of the things that you've worked for all your life are at risk for this one judgment. So let's try again and look and see what could happen if we choose LLC or corporation. Well, your personal assets are protected. The sub can only go after the assets of the company, which are limited to the money in the business bank account. Okay, and so in this particular case, and if the company has properties, he could possibly lien the properties if he doesn't get all of his money. But what he cannot get, or she, what they cannot get is what is yours personally, if you are in this situation. Now, I want to tell you, I am not an attorney. I am an educator. I am a business advisor, a certified business advisor, certified business coach, certified tax advisor. So I don't want to represent something that I'm not, but I do want to tell you this, that if you've chosen this structure, you also might want to be thinking about the fact that that sub could try to sue you, jointly and severally if he believes or she believes that you have made a mistake. That's one thing. And they may not try it. But if they believe that you were negligent, they may try to sue you jointly and severally for this particular issue. But what I will tell you is that generally, the way that commercial code works, if you have a limited liability company or if you have a corporation, you have limited liability as well. And so that does protect you. Now, there was one other option that we did not talk about at the beginning of this. He talked about the three commercial structures that you could set up in with the state, meaning that you could file documentation, being paperwork where you can register your organization with your Secretary of State in your state. But there are other options. You could choose to be a business trust, okay, which does not require any registration, and it separates you personally from what's going on in the company. If you're not the owner, of course, then in this particular case, you would not be liable. And if you don't have the other things under that particular entity that are at risk, then you could then kind of insulate yourself, separate yourself from what's happening at the business level. Okay, so, yes, your personal assets could very well be protected, if you choose the structures, LLC or corporation that are registered with the state and you are the individual working. Okay, anybody got any questions about that before we move to the next thing? All right, let's move. Okay, so you've been in business for a few years and things are going well. You decided to take out a loan to buy some new equipment. The loan is for $50,000 and the terms are good. But then this happens. You have a slow month. The lender comes to your home to repossess the equipment. They also sue you for the unpaid balance of the loan, plus interest and legal fees, $60,000. Choose the best path. Which structure should you have chosen in order for you to be in a situation where your asset would not have been taken, or for that matter, you may not have been personally liable for these legal fees? So let's see what would have happened if you had chosen sole proprietor. All your personal assets are available for lien. There's nothing that you own that is safe. Okay, but let's look at what could have happened if you had chosen LLC or corporation. Because your business is an LLC or corporation, your personal assets are protected. The lender can only go after the assets of the company and the business bank account and the equipment for the job. Okay, so these are things that you need to be thinking about when you choose your structure. Let's look at another one. You're driving to a job site when you accidentally hit a pedestrian. Not a good thing. The victim is seriously injured and sues you for $1 million. Ooh, you don't have that kind of money. So the victim gets a judgment. What is the best structure to protect you and your assets? Well, and again, I know we're doing this backwards, but I'm just saying, if you were a sole proprietor when this happened, let's see what your fate could have been. Your assets are frozen. They take your home, your car, and your retirement. Yeah, not a good thing. But let's take look at the other option. If you had chosen LLC or corporation because your business is an LLC or corporation, your personal assets are protected. The victim can only go after the assets of the company in the business bank account and the equipment for the job. You're working on a roof and fall, breaking your leg. You have to go to the hospital and have surgery. Oh, man. You are out of work for 3 months. Choose the best path. Okay. What should you have been in order to properly protect yourself from this situation? Let's look at the sole proprietor route and see what could have happened. Well, you have medical insurance, but it doesn't cover all the bills. You end up with a $20,000 in medical debt. Not a good thing. But if you had been an LLC or corporation, because the business is an LLC or corporation, you can apply for disability benefits, which also will replace a portion of your lost income. You also have medical insurance, which covers most of your bills. So, having the ability to be in a position where you own your company as an LLC or corporation has some advantages where you can put benefits in place that will protect you from something like this. You can actually participate in different types of health insurance plans that are for businesses that are structured in this way. You could also have some sort of insurance that will, make sure that you're covered, across the board for some type of special issue like this, accident insurance, or there also are some other kinds of benefits that you could have taken advantage of. And we're not going to make this about insurance today, but I'm just saying that if you are a business, there are far more options available to you. Okay, so you return and close your business. When you file taxes for the year, you discover that you owe $10,000 in back taxes. What should your path have been in order to protect you in this situation? Well, as a sole proprietor, you are, your business. You really are your business. You are exposed. All of your assets are as well. Game over, you lose if you're in that position. But if you're an LLC or corporation, because the business is an LLC or corporation, you can negotiate with the IRS to set up a payment plan. Okay. And you can negotiate personally if you are a sole proprietor, but that does also put, again, all of your assets, your personal assets at risk. And if something happens where you can't make that payment, the IRS has legal right to come and take your stuff. Okay. Just saying. However, if you are an LLC or corporation, you can negotiate with the IRS to set up a payment plan. And if something happens where you fall short or you are not able to keep up with that payment plan, who is liable for this is the corporation. If your LLC is a pass-through entity, then you're still liable because you're still operating like a sole proprietor. But if you set it up where it's an S corp, then in that case, you're viewed as a corporation. So there's some other things that can kick in for you, with that S corporation election. So, we can talk a little bit further about what all of those things mean, and I shared with you all that we would be doing a deeper dive into the S corp, and if you have a business trust that owns your LLC. We've talked about the fact that we're going to talk, even more deeply about how you can set up your business trust that in such a way that it is like an S corp, okay, and it operates, with some of the same benefits of that small business election. So, we really want to help you to understand that it's very important, that as you're making it to the end of this game, okay, that you're thinking about structure and thinking about how you can keep the right structure for the sake of your business. We want to, just have you thinking about, what are the best possible solutions, for when you've decided that you want to go into business. And so we're going to throw up some other slides right now because I want to, share with you, what this could look like for you if you were deciding to really think seriously about limiting your liability and how, you could be affected positively, by choosing the right structure. So let's take a look at this. And I'm going to share my screen again so that you can see the wonderful slides that we have prepared for you today. Okay. Some of you guys who are in our other courses, we have a course called Maximizing Limited Liability, might have seen some of this presentation before, and so we really do hope that, this is just a refresher for you. But for those of you who have never even, been in that particular course, you get an opportunity today to see what it's like to come to one of our B-School Central courses. So I'm going to get us started with these slides and then we'll jump further later. Thank you for joining us for B-School Central, where we explore, strategize, and achieve results. Grab your paper, your pencil, your tablet, your Apple Pencil, whatever you might need so you can learn how to do business better. And now, B-School Central. Okay, so now you're in the B-School Central classroom, and so we're going to talk a little bit more about limited liability because I want you to understand what it really means when those terms are used. A lot of people see that and they feel like that it's the fail-safe. I've got limited liability. That means that nothing can touch me. And I want to share with you that, there are some strategies that you can use to insulate yourself a little bit better so that you're right, you can separate yourself from your company so that nothing can touch you. But I do want to share with you what limited liability is and what it's not, and the type of entities that can have, this limited liability structure, and have it really work for you. So today we're really going to, kind of go a little bit further into the limited liability side of things. And there are three different options that we're going to talk about: the limited liability partnerships, limited liability companies, and corporations. So let's talk about how they are all alike. Well, limited liability really, it means this: when either an individual or a company functions with limited liability, this means that assets are attributed to the associated individuals cannot be seized to repay the obligations attributed to the company. Under the guise, the guise of limited liability, when you are in that position, you are separating yourself from the company in a way that what you have personally is not at risk. So let's talk about how they're different. Well, the key differences here is how the limited liability protection is recognized and how LLCs and LLPs are managed and how each structure is taxed. So when we look at a company or a structure that you might decide you want to use, for your the purpose of doing business, we're looking at three things. Okay, how you're managed, how you're taxed, and how your protection is recognized. So let's kind of talk about that. The LLCs, the owners of an LLC, and a limited liability company, are members of the organizations. Okay, and so when we talk about membership in an LLC, what that really means is that you have probably put in some money or some sweat equity or some intellectual property or something like that, and you have a membership stake or a beneficial ownership position in that company. Limited liability companies create a financial barrier between the owner and the company. And the owners aren't personally liable for the negligence or misconduct of their co-owners. And so that's really important to know that if you're in business with someone and they do something that is criminal, or they do something, that puts the company at risk per se, you're not liable personally for their mistake or their error, and or the error of their ways, I should say. Limited liability companies have a great deal of flexibility in the way they are structured and in the management, how you could set things up. You could have a person that's a CEO, a president, or someone that's actually operating as a supervisor or a manager at the company level, while you also have those beneficial owners that are the members who are considered, the managers. You could actually have that structure where you have someone manage the company, specifically, that may be connected to the LLC or not. You could have a whole company that is a managing member or manager, not a managing member, but a manager of your LLC. That's a structure that is allowed in most states. So the structure, management, and the decision making could be in the hands of someone else. It just depends on what your needs are as a limited liability company. And so we could talk about that further if you would like to set up an appointment, but I want to just share with you that that's a big difference. Okay. In what one limited liability company might do and another. And also, depending on the industry, those particular things that we talked about could be very different. Somebody who is a limited liability company that's in retail might structure their company very differently than someone who is in a service-based business, or, like insurance or accounting, or for that matter, even coaching, or, some other kind of industry, that might be where you're a solopreneur. Okay. So your structure might be very different. There are some people who are single member LLCs. It's just one of them. And so based on that, their structure is very different. Okay. So let's look at the LLP, the limited liability partnership. The owners of an LLP are considered partners, not members in an organization. And this is the type of organization that's common among a lot of professionals like doctors, attorneys, architects. They have to have a specific kind of license, to operate. A lot of them are board certified in their field, and being board certified, then they can structure this particular type of company because they have a professional license. Well, the limited liability partnership offers a way to avoid unlimited liability for the business, and also, against negligence. So some doctors, they will form a doctor's office or for a firm, and that they might have as their physicians on their team that are also individually board certified and licensed. They might have a group of people that are operating. They may be in different disciplines. Some might be specialists and some might be generalists, general medicine doctors, MDs, or they might be, people who are orthos, orthopedic, doctors or DOs, doctors of osteopathy, all of these different areas. And so what you might want to look at is if you're in a professional area and you set up an LLP, you want to make sure that you are in your state, that you are completely protected from the liability of those who are within your team or within your doctor's group or your firm. Because in a couple of states, and I don't want to go into the individual states and on all the different rules, because LLCs and LLPs function very differently in every different state. There are a few states where they're kind of the same, but then there's some states where they are really different. And so, matter of fact, there are some states that don't allow, for an LLP to even be formed in their state. They don't have an option for that. You have other options in that state. But I want you to share alongside of what we're doing, okay, your opportunities when you're talking to people who you're thinking about setting up this kind of business with, that you might want to look at what is going to be the most effective way for you to structure your limited liability partnerships, because you have so many options for the structure, and setting the structure up where everybody works, and you guys are all sharing the office and you all have resources that you share, but then there's certain things that are very separate, based on, even though you're in the same doctor's office, okay, you might have something that's very different that you are doing than something that someone else is doing. And so you want to be able to maintain brand and all of these things, even though you guys are all working out of the same doctor's office. And there's some things that you can do to maintain that, even though you're one office. So that's something we can talk about. If you want to set up a meeting, we can, have an advisory session about what could happen in your firm. But partners aren't liable for other partners' negligence in most states, and they may remain liable for the general business obligations in some states. So we want to look at what it is for your state so that we can make sure that you're taking advantage of the proper structure and you're getting out of it everything that you desire. Okay, so a limited liability company is a business structure that protects its owners from personal responsibility from their debts or liabilities of the company. And limited liability is a type of legal structure for an organization where corporate loss will not exceed the amount invested in the LLC or the partnership. And some limited liability companies are partnerships and some of them are not. So let's talk about that, because when you set up your limited liability company, and it may only be two parties that are in that membership in the company, you might be viewed as a partnership if you do not elect to be an S corporation. So, which is a mom and pop viewed as a corp, as opposed to viewed as a limited liability company. And so for that reason, people consider, having this S Corp election, which is a type of, viewpoint that you can put on your company for tax purposes to establish that you will be viewed as a small business and you will be taxed as a small business, as a corporation, and not have the pass-through taxes that come through that actually are accumulated according to your individual tax base. So that's something to consider when you're looking at becoming an LLC, how you want to be taxed. And if you have the desire to be an S Corp, which we're going to, as I shared, we'll do a deep dive on the S Corp in coming weeks. But if you want to be or choose that particular election, you've got to do it in the time frame. Those forms that have to be filled out in a short period of time when you become the S corp. Now, could you come back later and ask the IRS for that election? You could, but they could say no. So why, wait to the last minute or exceed the deadline and not take advantage of it during the time frame? So you need to make sure that you're filling out that paperwork within 90 days of your company getting started, because if you do it during that time frame, then you're able to take advantage of becoming the S corp. The IRS will most likely approve you for that, and you can move on with life. Now, what I will tell you though is that you need to also have the consideration that if you are a husband and wife team and you're filling out your paperwork, you're not a multi-member in most states. You're considered, especially states where there is, community property state. And so you have to be looking at the fact that the IRS is looking at you as, at the federal level as a husband and wife being one. Okay. And if you are entering this realm and you have a different kind of structure that you want to have set up, then we need to look at how do we structure the LLC so that you're still a multi-member if you're married. And there are some things that can be done, but essentially, if it's you and your wife or you and your husband that's setting up the LLC, you will be viewed as a single member because of your status of being married. And so in some states that they give you a little bit more latitude than in other states with that. And so we can talk about that in a different session. But in this session, for the sake of what we're doing with the limited liability, we just want to make sure you have the concept. Okay, so the limited liability partnership is a business structure that allows partners to benefit from economies of scale by working together while also reducing their liability for the action of their partners. You don't become negligent and then have your partners end up in a situation where they have to share the burden of something that happened because of your negligence or because of your error, or your mistake. They are in a position where they are completely absolved from that, position. And so, and the corporate loss, is not going to exceed the amount of the invested, what amount that you put in the partnership. Okay. All right. So the corporation, how is it set up? Well, a structure in the United States that protects its owners from personal responsibility for their debts or liabilities, usually a group of people or a company authorized by the state to act as a single entity, a legal entity recognized by private and public law, born out of statute, okay? A legal person in a legal context. So if you set yourself up and incorporate, then you are recognized as an entity, even though you might be one person. You might be the president, the secretary, and the treasurer. The state and the federal government recognizes you as a corporate entity from the moment that you are set up and you have filed your articles of organization, of incorporation, not organization. And you're recognized as such in law for a certain purpose. Okay. So you want to understand that when you set yourself up as a corporation, you also could take the S corporation election to operate as a small business, even though you have incorporated. So that could be something that you choose in that particular structure. So now let's talk about the pros and the cons. Well, the pros. If you choose the LLC, only one member is required to get it started, and the business structure protects your personal assets from the company's debts. It provides privacy for your personal information. Depending on what you share on the articles of organization or not, people will not know, some private information about you. For example, you do not have to share where you live. You do not have to share, other intellectual property information from the company. All of that can remain private inside, neatly tucked away inside of that LLC. So, there are some really good advantages there. And then you have flexibility in how the business is taxed. You could become, as I stated, the S corporation and be taxed as a small business, or you could be taxed as with the pass through, where all of the taxes and the cash come through to you. So those are options, and those are advantages because you have the option to choose whatever fits your situation. But the disadvantage is that it may require some annual paperwork, and that might not be something you're looking for, and there might be an annual fee in your state. Okay. And so you want to look at that. Like in California, there's that $800 fee. Some people were experiencing this yesterday, having to fork out $800 for every LLC that they have, that's under a certain amount of money. And as the LLC grows in its revenue, the fee gets higher. Okay. So you want to be looking at, the annual fees and paperwork, if that's something that you're really looking to do, when you're setting up the structure. Then some states prohibit certain professionals from opening an LLC because the LLP option is available in those states, and LLCs cannot be run, by people who have professional licenses in some states. All right. And so let's look at the advantages of the limited liability partnership. You're protected from other partners' negligence. You have flexibility in the management structure. You can kind of structure it however you want, retaining, some control and branding amongst each one of the partners. And it's relatively easy to set it up. But the disadvantages there are they're not recognized in every state, and it may be restricted to certain professions. If you don't have a specific license or certification, you may not be able to set up a limited liability partnership. All right. So now corporations, there's some pros and cons here too. Shareholders have limited liability. That is a big pro. So you can use your corporation in such a way that you have other people riding alongside of you. Maybe they're not in there doing the work, but they could be a shareholder. And the way they become a shareholder could be because you used the corporation to raise funds either before you started or while you've been moving forward. So some privately held corporations, meaning that they're not, on the stock exchange, they get investments from others, to get started. And they position themselves in a way that people are riding alongside of them financially to help them, as they're starting their company or as they're doing different things in company and they're growing. Sometimes they take on other investors or other people who own a position, an equity position, an equity stake. You might have heard those terms utilized in that privately held company. And the shareholders are normally only financially liable for the amount of their investment, which are the percentage of their investment, which protects them, from any risk personally, from this, corporation. Corporations also can raise funds in a public way. They could go public, and they can sell shares and issue bonds to raise funds for the business as the business is needing funds. And there's no life limit on a corporation. They have a perpetual life. It can, so since the ownership can pass through to generations or generations of investors, after the initial founder has passed away, the business could have a succession plan that allows it to pass along the corporation to other owners, or for that matter, the owner's children, or even managers. People who worked at the business can sometimes own a stake in the company. And if something happens where the owner passes away, then the ownership now can move from quickly, can move from one person to another. And corporations are attractive to investors when investors can kind of see how their investments are protected and that they have a specific type of share, preferred stock or common stock in the company, or for that matter, an equity stake in the company for their contribution at the startup. It really is an attractive offer to say, okay, I own a piece of that. Okay. And then there are tax deductible expenses. Owners may receive some tax-free benefit, including retirement plans, insurance, and they can deduct employee and officer benefit costs, so there are some real attractive things that you can do with a corporation. And even there are not just taxable concepts, taxable benefits, but I should say tax-free benefits, but there are some structures that you can do with your corporation that does really provide a wonderful structure to help you while you're growing. You can actually have a compensation analysis done, and you set up a compensation plan, for you as the owner slash operator of this, corporation, the person who is you might be the only shareholder, but you can still set up something for yourself. For example, you can have educational benefits and all other types of things that, kick in, as the company is making money. And so there might be some non-salary compensation, that you can take that could be tax-free depending on how it's structured. So lots and lots of things that you can do at the corporation level. But there are some things that you need to pay attention to, that we could consider disadvantages or cons. A corporation is a distinct legal entity, and just like that can work for you, it could be something that you might not be looking for, because a business that is a corporation is governed by a board of directors. You are not a rogue agent when you have a corporation, and there are other people involved, especially if you have sold some of your shares, or there are people who have an equity stake in your company. So if you want to maintain full control of your business, you might want to look at a different business structure, like that business trust that I talked about, or an LLC, because you don't have this same issue of having to have a board overseeing you, or having to constantly be in a position where you have to have board meetings about the decisions that the company is making. Now, the other thing is that for tax purposes, corporations have double taxation. They pay taxes on profits of income distributed to shareholders. Then shareholders have to turn around and pay their share of taxes on their shares. And if you are the sole owner of all the shares, you're going to pay taxes at the corporate level, and then you personally are going to pay taxes when you take your owner's draw, or when you get your paycheck if you're a W-2. So you got to look at that. If you qualify to operate as an S corp, you can actually avoid the double taxation. And since the profits and losses do pass through to your personal income, you actually can have that happen and not concern yourself with that double taxation issue. But they are a little bit more complicated to form. They require more documents and filing fees. And there are some rigid, requirements inside of the corporation. It has to follow a strict process, and it faces a lot of regulations compared to other business structures. And as it gets larger and it's making more money, those things only become more. So they have to maintain the board of directors, follow those bylaws that were set in place, and have some complete, what we would call, reporting tasks. So, the balance sheets and the profit and loss statements and your, cash flow statements, and, the having these things and filing annual reports and things of that nature become, sometimes a little burdensome. So if you're going to set up a corporation, try to put the structures in place to be able to support it, so that you're not having to, do all of that on your, own time per se as the sole shareholder of the company. When you have people in place to support you, then or companies, you can hire in a fractional CFO or fractional COO to assist you with some of these tasks. Okay. Now, there are some legal disadvantages as well. Corporations have no protection from self-incrimination, and corporations don't qualify for court-appointed attorneys for legal matters as well as an individual might. And so that's something for you to be thinking about, because it is very, very important that that if you are a corporation, you could be in a situation where, if called to testify, you are not protected, from self-incrimination, because, it is an entity, but, you still have a responsibility there. So, with that being said, I want to really help you understand what the limited liability was all about. And thank you for being here with us for this, last 45 minutes or so. We look forward to you reaching out to us if you have other questions, or you decide that you really want to open up this type of entity, that has limited liability, whether it's a corporation or an LLC, or for that matter, an LLP or a business trust, even though we didn't deep dive into the business trust. But we will, in a future session, explain how the business trust could operate as a commercial entity and what it might take for you to use that trust, in place of some other structure that has to file with the state. I want to remind you that if you set up a limited liability company or a corporation, and you are the sole owner, or you own more than, I should say, even 25% in that entity, you're the beneficial owner of that company, or a beneficial owner of the company, then you're required to fill out the beneficial ownership information reporting form online, unless you are one of 23 types of entities. And so we'll go more into the BOI. Again, I shared with people that I would do it, every quarter this year, just as things were changing, because some different guidance has been made available to us, and in the frequently asked questions section, they've continued to answer questions about a lot of different things with regards to the structure that you might have. So we're going to go more into that form and how to fill it out. If you formulate your entity this year, within 30 days of you forming the entity, you have to fill out that form if you're not exempt. So please know that if you're a new entity and you are not in one of those 23 spots, okay, like in insurance or securities or accounting, and there are some others, and we have shared it. Actually, it's available on YouTube already. We did a session on the beneficial ownership information form. So you might want to find that one, but we'll go a little bit further next quarter to really help you understand what it's about and how it functions, so you can see whether or not this is something that you want to consider, or take into consideration, I should say, as you're formulating your entity. But in any event, depending on what it is that you decide to do, I want you to understand that we're here for you. Red Worldwide is a membership organization for businesses. Our membership costs $140 a year, for the membership fee. And then it gives you access to some of the different services that we have for a 20% discount. Some other things are free. You get business advisory sessions for free. You have some other support that we provide to you, because membership has its privileges. So we do want you to take advantage of that. And if you want to learn more about our membership, you can go to our website at www.redworldwide.org, and you can set an appointment, or, because right there at the top it says schedule an appointment, or you'll also be able to see right there on the website where you can join if you're ready to join. By clicking on the Join Red Worldwide button, it'll take you to a place where you can see all of the privileges and features features that the membership has, and make a good decision about whether this is something that you want to do for your company. And remember, we're tax deductible. So, if you decide that you want to pay for your membership, you can always write off the $140. So just saying, something for you to consider. Well, thank you so much for being here with us, and we'll see you again.